Hey everybody, Chuck Barone, back from the sick bed. Tuesday, May the 30th, 2023. Going to be a weird week this week with the holiday yesterday. Hope everybody enjoyed their Memorial Day. Want to apologize for missing the end of last week. I was here in the office on Thursday, putting my notes together for the show, and all of a sudden I just started feeling really sick. Knocked out for Thursday and Friday. Started feeling better on Saturday. By Sunday, I was pretty much my old jovial, yay, good self. But it's good to be back, and we got a lot of catching up. Before we get rolling, though, let me welcome everybody to the show. As always, thank you for your support, for what you guys do for us every day here, watching the videos and sharing them, and your likes, questions, comments. We appreciate it. All right, so let's look at these markets today. Well, last week finished with a doozy, a lot of bad news, for the Fed at least. So markets today digesting that news, kind of not really much of a day, really. Markets ending mixed with the Dow down 50 at 33,042. The S&P basically flat at 4205. And the NASDAQ makes a little bit of a gain, plus 41 points, 13,017. So here we sit. And the market not really moving today. I know we got some news coming later. Interesting consumer report today, consumer confidence report. So we'll see how the markets digest this stuff as this week progresses. Bond market did have some action today, though. People fleeing in the stock market, apparently putting money into bonds. Maybe if anticipating a pause, I don't know. But markets really moving today. Yields coming down. The 10-year dropping 11 basis points to 3.70%. The 2-year drops 13 basis points to 4.46%. So, the yield's coming down a little bit. I don't know, guys. I think that, with the news the Fed got last week, I don't know, rates are high enough yet to kill the beast, so to speak, this inflation bugaboo. So I don't know. We'll see where it goes, but we'll get more information as data comes in this week. The dollar today down very small. Nice number for the dollar, 104.08 on the index. Gold's mixed, strong dollar, going to put a little pressure on gold and silver. Gold leaps up today, though, $16.40. $1,959.40 for an ounce of gold. Silver flat today, $23.17. Markets for gold and silver pretty solid still, especially in the face of this super strong dollar. So metals looking, in my mind, pretty good. Not, you had gold up over 2,000. You had silver up over 25 for a minute there. Not quite those lofty numbers yet, but they'll be back, don't you worry. Oil today down, though. Wow, oil took a little bit of a shot today, down $2.90, $69.77 for a barrel of West Texas Intermediate. Right back, well, at least very close to that trough we've been talking about, between 70 and 75. Seems like that's where oil's been really comfortable trading per barrel. Well, we'll see if it stays now, if it's on a leg up or down. I think it ends up, it might come down a little bit and stay for a little bit, but not really. It's going to get back in that 70 to 75, I'm guessing, before long. Now, Bitcoin today up small today, up $130, 27,802 for Bitcoin. Good number for Bitcoin, man, holding its own there too. Not quite at the top where it was with the 30,000, but still holding its own for sure. All right, so like we do at the beginning of every week, we're going to go over briefly what you guys can expect this week as far as what the data is going to be coming our way. We'll get a little bit of an idea of where the Fed and the market are going. We know we got this big open market committee meeting coming. Wow, it's going to be interesting, guys. Okay, so let's look. So today we're going to get the consumer confidence report. We got that already. I'll talk about that a little later. Tomorrow we'll get the mortgage bankers index. We'll get the Chicago purchasing managers index. We'll see where things are going. We know that, mortgage brokers are going to be down. real estate sucks right now. Chicago purchasing managers, industrial stuff and business purchasing, that's probably going to be down too, I'm guessing. On Thursday, that'll be the big day. I'm guessing we'll get our jobless claims. They're expecting 235,000 from 229 last week, which was a stunning number. We'll also get construction spending, which is they're expecting it to be up barely. We get the ISM manufacturing index. We'll get both sales and productivity on that, both expected to be down. We'll get unit labor costs, which are expected to be up 6.3%. That'll put a little more pressure on the Fed there too. So that's going to be interesting to see where that comes. On Friday, we'll get the new unemployment rate. We'll get which is expected to go up to 3.5% from 3.4. And we'll also get the non-farm payroll numbers, which is basically the job creation numbers. They're expecting 188,000 jobs last month, down from 253,000 in April. So we got a big week of data compressed into a very short period here with the holiday. Now, the consumer confidence report did come out today. It was down as expected, 102.3 on the index from 103.7, so down about 1.5 points. Still a pretty strong number for that consumer price or consumer confidence index. So consumers still feeling pretty positive about their own prospects. The interesting thing is the expectations index, which is kind of where they think we're going to be in the next 12 months, not looking so great. Still coming in, sank down at 71.5 from 71.7, just a small move to the downside. But here's the interesting thing. Under 80 signifies that it's going to be recession in the next 12 months. 71.5 is a pretty big drop from that 80, right? Or a pretty big number below that 80 number. And it's been below 80 since February of 2022. So this is the phantom recession last year. People still expecting that recession to come. Is everybody just feeling really negative? Is it just, things really aren't as bad as everybody believes they are? Is that possible? I don't know. Fantastic numbers, though. So we'll see. A lot of things pointing to recession. We never did get it, though. And we still haven't. So we got a lot of stuff to keep an eye on here, guys. All right, so let's talk about last week. I missed the end of the week. It was such a bad time for me to miss because so much stuff happened. So we know we got the PCE numbers. They came in they weren't really up from where they were, but they're still pretty elevated enough that the Fed's going to be uncomfortable. And I think the Fed really wants to pause interest rates. I don't know if that PCE number and the rest of the data they got at the end of the week is going to allow them to pause yet. The tough inflation, still hot job market, still rising wages. Now they got this debt ceiling thing out of the way, it looks like. It looks like the president and the speaker managed to get a deal together. I think the deal will ultimately get passed. Of course, they got until June the 5th, which gives them basically, the rest of this week into the weekend through the weekend till next Monday to do their grandstanding. I'm sure we'll be talking about people both from the right and the left who hate it, don't want to, will not support it, blah, blah, blah. It'll get through by the 5th, okay? The jobs, they had a provision in Massachusetts. I guess Massachusetts had some jobless claims fraud, which was adding 14,000 claims per week to the jobless claims numbers. So they had to revise a lot of those numbers down. That's what gave us the shockingly low 229 last week. They were expecting around 250. Now they've lowered their expectations for this week. We'll see if the jobs market stays hot. If it does, what do you guys think? I mean, now it looks like Wall Street's pretty much convinced that we're going to have a rate increase at the Federal Market Open Market Committee meeting coming up. I think it's the 2nd and the 3rd, so over the weekend, or maybe it's later into early next week, but any minute now. And it's going to be fascinating to see what the Fed actually does here. You know, do they believe that they've done enough to keep inflation numbers coming down? You know, the evidence not really pointing to that. You know, some stuff coming down, but, you know, it seems like gasoline staying really high, some food prices and services especially. It just seems like everything's super expensive now. So it's just going to be, I can't wait to see how they decide. What do you guys think? You think that pause or another hike? And if they're going to hike, what? They're going to give us a 1/4 point probably, I would guess. That would bring the Fed funds to 5.35%. I still, as for me, I'm still in the pause. I still think that in spite of the tougher numbers we got at the end of last week, they kind of had it. They wanted a pause. The majority of the voting members seemed to be leaning toward pause. There were a few vocal members talking about, you know, continuing to raise rates. I just don't know how much more rate increases the economy can handle. And the Fed tends to overshoot a lot in these situations. That's where you get the term soft landing from, right? You know, the Fed has to nail it, and they very, very seldom do. So we got a lot of information to deal with this week. We're going to be here to bring it all to you. So we'll see. Fed, I think still, like I say, the Fed pauses. We'll see the data. I think tomorrow, you know, will be a kind of a quiet day. There won't be much data to digest unless there's some shocker with earnings or something happens, you know, news-wise, newsworthy stuff. Thursday will start the ball rolling, though. We'll get the jobless claims numbers. We'll see how that looks. We'll get, you know, manufacturing numbers, productivity numbers, the unit labor costs combined with the jobless claims, I think might be the tip. They're expecting an increase in unit labor costs up 6.3% in the first quarter. That's a pretty big number. We'll see if, you know, if it comes in there or higher, you know, that might force the Fed to raise rates again at the next meeting. Anyway, fascinating stuff. I'm glad to be back. We appreciate your guys' support. We'll be back tomorrow to bring you the news you need. Hopefully, this is going to be a decently quiet, nice week where we can finish this month out okay, move into the summer. You know, Wall Street used to always say, sell in May and go away. And at least when I was around, that was what people talked about, because a lot of Wall Street people head to their beach houses for the summer, commuting back and forth, but trying to spend some time away from the office. I think that's a good idea for all of us, but not yet. So we'll be back tomorrow to bring you guys the news. We appreciate your support. If you have any questions, hit me up in the comments. If it's something a little more in-depth, ask Chuck Barone at gmail.com. Ask Chuck Barone at Gmail if you have a more in-depth question. Until tomorrow, guys, take care. Thanks.